And in our top business story, the 6th Middle East Business Aviation event opened earlier today and delivered on its promise to be bigger than its 2012 edition. His Highness Sheikh Ahmed bin Saeed Al Maktoum, Chairman and Chief Executive of Emirates Airline and Group, inaugurated the event staged at the Dubai World Central. His Highness toured the show and met with some of the exhibitors occupying the 75,000 square metre exhibition space. He also visited some of the new aircraft and inspected the latest technologies featured on board. The Middle East Business Aviation Association's founding chairman, Ali Al-Naqbi, says the show continues to reflect the impressive growth of aviation in the region. It has the key players in business aviation from around the globe, over 420 exhibitors from the US, Europe and Asia, as well as a large representation of local and regional companies. It also features 26 chalets and a static display of 50 business aircraft, including an Airbus corporate jet ACJ391, a Boeing business jet 737-300 and aircraft from Bombardier, Gulfstream and many others.
I'm happy really to see this exhibition is growing year after year. I think they reached this year over 400 plus company. I think the industry here in the region, if we're talking in the UAE and also around the Middle East, is a growing market. And I'm sure we'll see it growing, especially with also looking at the new aircraft today with their new technology. And I think at affordable price.
UAE playing a very major role in the economy of the Middle East, of the business aviation, the Middle East and North Africa. So therefore, you will see a lot of activities happening in this show. This show is basically a continuation of a discussion took place with a buyer, between the buyer and the seller, where they just make the announcement in this show, because it's a very good platform where all the media around the world are here. So what exactly happening, there's a lot of announcement going to taking place here. Some of it is going to be already done, and some of them in the way. UAE is leading the Middle East and the North Africa when it's come to the showing such product, and we are very delighted and excited about what we have today.
Among the major announcements on day one of MEBA includes Royal Jet's confirmation of the delivery of 2 new aircraft in Q4 of 2014. In addition to this is the arrival of 2 new aircraft in early 2015. The Middle East's foremost private jet charter companies said the Bombardier and Boeing aircraft are part of Royal Jet's fleet replacement and expansion program to increase their current fleet of 11 aircraft to 20 aircraft by 2020 at a cost of $700 million.
We've taken delivery of a new Learjet 60XR, which carries 7 passengers, has a nice range, and it also doubles as a medevac airplane. And it's got an updated cockpit, lots of new instrumentation, and equipment that moves us right into the forefront of Middle East aviation. Also from Bombardier, we have taken delivery of our first Global 5000. Now this is an airplane with, it's easy to remember the range because it's 5,000 nautical miles. That's why they call it the 5000. This carries 12 people in really great comfort, and even as tall as I am, I can stand up in it and walk around. It has a magnificent interior, and the cockpit is just a joy for pilots. Right now we're absorbing a lot of airplanes this year. These 2 BBJs that are coming in at the end of the year will be green. We'll be sending them to a completion center for a brand new interior in each one. And then as they come back into the fleet towards the end of 2016, we'll be deciding if we sell some of the other BBJs or maybe find another niche to work them in.
A new report released by the State of the Global Islamic Economy on Sunday has highlighted Dubai's leading role as an incubator of knowledge for the Islamic economy industry. The Dubai Islamic Economy Development Center, in partnership with Thomson Reuters and in collaboration with the Dinar Standard, launched the 2014-15 report for the 2nd consecutive year and introduced the Global Islamic Economy Indicator. The indicator presents the current development health of Islamic economy sectors across 70 core countries, with the UAE, Malaysia and Bahrain leading this inaugural composite index. The report, which indicates the continuing build-up of the Islamic economy's momentum, estimates that global expenditure of Muslim consumers on food and lifestyle sectors grew 9.5% from previous year's estimates to $2 trillion in 2013 and is expected to reach $3.7 trillion by 2019. The report focuses on core sectors of the global Islamic economy and their ecosystems. Collectively, these major sectors are Islamic finance, halal food, and lifestyle sectors such as fashion, travel, pharmaceutical and cosmetics, media and recreation. The report showed that global Muslim spending on food and beverages has increased 10.8% to reach $1,292 billion in 2013. The top countries with Muslim consumer food consumption are Indonesia, Turkey, Pakistan and Iran, with the UAE, Malaysia and Australia leading the halal food indicator that focuses on the health of the halal food ecosystem a country has, relative to its size. Additionally, the UAE scored highly in the halal tourism indicator and recorded the highest spend for Muslim cosmetics consumers at $4.9 billion. Currency and commodity markets closed the week lower as a big surprise in Friday's U.S. non-farm payrolls continued to solidify the bullish sentiments underpinning the U.S. dollar. Friday's report came in at 321,000 new jobs in November, well above the expected 230,000. The unemployment rate was unchanged at 5.8%, in line with expectations, while the labour force participation rate held at 62.8%. Following the release, the US dollar index peaked at a 5.5-year high at 89.46, while the other currency majors and commodity markets sold off sharply. To find out more about this and the upcoming week in the markets, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East.
It was another stellar week for the US dollar, as we saw the US dollar index closing between the channel of 89.50 and 90 levels. Of course, this was on the back of a stellar US non-farm payroll report, which logged its biggest gain since January 2012, when it came in at 321,000 new jobs. Now, the report caught the markets largely off guard. Expectations were for a gain of 240,000. But if you look at the reaction to the markets, it's more along the lines of good news is bad news, basically. And what that means is better than expected US figures is continuing to support the US dollar and lead other asset classes down. So we saw US equity markets drop, we saw commodity prices drop, gold was extremely volatile. It had fallen down to 1190 levels before recovering just below 1200 levels. We saw other currencies dropping against the US dollar, and this is a trend that's expected to continue once again for that interest rate differential. Stronger US data would lead to speculation that the FOMC will be looking at increasing interest rates, and this will continue to see that spread widen between the US dollar and other asset classes. If we look at the economic calendar in the week ahead, we expect markets to stabilize in these current levels. We expect the dollar bias to remain in trading this week. If we look at the calendar, we have some manufacturing and industrial production figures coming from the UK on Tuesday. We could see a little bit of a respite for GBP long players. If we look at the calendar for China, we have some industrial production figures coming from China due out on Thursday, and we wrap up on Friday with the University of Michigan Consumer Confidence from the US, which is expected to be slightly better than expected. But overall, markets should be naturalizing in these ranges. The US dollar index technically is finding very stiff resistance at this channel of 89.50 and 90 levels, and we don't expect a conclusive break of that channel in this week. So we expect markets to remain in this range. We're expecting the euro to also find a little bit of weakness in this week. We're going to keep a new support level at 120.80 levels in the week ahead. We're seeing the euro breaking 123, and the anemic condition is expected to continue following a rather bearish testimony by President Draghi on Thursday. The Indian rupee contract also expected to remain in this range of 159.80 to a higher channel of 162 in the week ahead. But overall, we continue to remain dollar bullish.